now, right now. Right 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 now, right now. Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government has been getting bigger. Hey guys, what's going on? Jeb here, and welcome back to Coffee and Crypto Live. This is your week daily morning show where we bring you the latest and everything Bitcoin and cryptocurrency. And in today's episode, we are going to be talking about the rally that didn't happen on Bitcoin. As you know, Bitcoin has been trading sideways for the last couple of weeks. And during that time, Bitcoin has been establishing itself a framework and a foundation upon which it can continue this rally on towards what we believe to be $35,000 to maybe even $40,000. Today, we're going to talk about when and how that breakout will occur and whether or not it will indeed be a break to the upside as we have been hoping. I'm really looking forward to today's show. Thank you so very much for tuning in. We've got Grand Roofie Incorporated in chat said, morning, everyone. Oh, my in chat said, hi, good morning. Crypto Mini Bike in chat said, morning, everyone. Joe Bollier, Dutch XRP, Pedro Valente, Philly Skills 1428, Alex Nybo, Crypto Ben Franklin, and Colin McDonald all in chat. Thank you guys so much for being here and joining us today. All right, let's go ahead and start off by jumping straight on over to CoinMarketCap. As you can see, Bitcoin's currently sitting at $30,314. It's up 0.29% over the last 24 hours. It's down 1.24% over the last 7 days. Ethereum is up 0.41% over the last 24 hours, down 4.77% over the last 7 days. And as we can see over on the price action charts, some of the bullishness that we have seen from the BlackRock announcement that they would be filing for a Bitcoin ETF has started to die off. And over the last couple of days, in fact, going back to Thursday, we've seen Bitcoin drop pretty substantially down here to about $29,700 and then bounce and move to the upside. Right now, it's trading between two levels that we've discussed on a previous stream at $30,000 as support and this uptrending level of resistance, which was previous support, making the top. Now we're moving into this almost inverse ascending megaphone pattern, you might call it, where you would normally have an ascending triangle pattern look something like this. Instead, we have our flat level right here, and then an uptrending level of resistance right here. So you might call that an ascending megaphone formation. You don't see those very often, but what they do represent is that Bitcoin is in a continuation pattern, and unfortunately this time Bitcoin's continuation pattern is a bearish one. Right now you can see Bitcoin trading sideways here. Excuse me on that, sorry about that. You can see on Bitcoin right here, we have this megaphone formation starting out of this major drop that we saw last Thursday that we commentated live on Coffee and Crypto. And you can also see that if we were to extrapolate the price target for this drop, then we would potentially see a drop as low as $29,000. Now, the question that might be on your mind is this: is that a scary drop? Would that be the end of this rally? Would that be the end of the presumably massive bull market rally that we've been in over the last 3 to 4 weeks, and that for most of the time we've been trading sideways, but in general we've actually moved up quite quickly? Would that rally be over? I would say no. I think that unless Bitcoin drops below 28,545, Bitcoin is still in very bullish territory, and the reason for that is quite simple. Bitcoin has rallied and broken through this huge descending trading zone that it had been, trading channel that it had been in for a span of nearly 3 months. And during that time, Bitcoin broke all the way above $27,000, all the way up to $31,500, leading Bitcoin on the largest rally that it has seen ever since about March 15th, on the Ides of March. Now, whenever Bitcoin goes through a rally this large, it typically also denotes that Bitcoin is having something fundamental happening to its price. And that is what we saw happen. BlackRock, of course, announced that they were going to be filing for Bitcoin ETF. And of course, Bitcoin has been rallying on that news. Now, moving right along here, we can see that Bitcoin has another uptrending level of support in play that is potentially even stronger than the one that we broke below on Thursday. This uptrending level of support goes way back, starting back here in February of 2023 with bottoms here in March and again in April, bottoms and tops here in May, and even some tops here in late May, moving on into early June. This uptrending level of support gives us support right now around $29,500 to $29,700. So long as Bitcoin stays above that level, then I would say that Bitcoin is still, generally speaking, in an ascending triangle pattern, as you can see right here, just by removing those trend lines for a moment. We can go ahead and put those back because I think they are relevant. I'll go ahead and remove 31K. But you can see that Bitcoin is still generally in this ascending triangle pattern. So unless we start breaking below this uptrending level of support, or especially if we start breaking below 28,545, I still believe that Bitcoin is in pretty healthy shape. From here, if Bitcoin is able to break bullish out of this ascending triangle pattern, bull flag, whatever you want to call it, conservatively, we're looking at a $36,000 Bitcoin, and more liberally speaking, you might be looking at a $37,000 to $38,000 Bitcoin, if not even all the way up to 40. And the precedent that we have for that is pretty clear. If we look at these rallies that we've seen this year, we've seen three major rallies, this being the third. We saw an initial rally of between $8,000 and $9,000, depending on what you want to draw it as and where you want to draw the beginning and the end. The second rally we saw happened here at $11,500. It was a 60% rally over the course of 35 days. And now, of course, we're seeing another rally form right here, about a 27% rally so far. We're up $6,500, and we've hit our head on 31K again. Let's go ahead and look at two scenarios. Number one, we could be in an ascending triangle pattern right here. If we do see that breakout, of course, we go up to 36 to 37,000, as we've already discussed. On the other hand, it is possible to look at this chart a little bit differently. And to do that, we're going to go to a different time frame on a different chart. Let's look out here on the 3-daily chart on Bitstamp and take a close look at what we saw really take place over the month of April, May, and even most of June. Bitcoin was in a major downtrend right here, following this uptrend that we saw starting in March. Now, if you don't know, downtrending trading channels such as this are typically continuation patterns of the trend line that went into them. The trend that went into that pattern was this rally right here. So remember, we have the potential of a price target based on our trading channel right here, and that would give us a price target up around $36,000 to $37,000. But if you draw this descending trading channel right here in April, May, and early June, and then you extrapolate, then that gives us a price target of $39,500. Whenever you extrapolate from a descending trading channel, oftentimes Bitcoin will actually go ahead and go through that pattern. Bitcoin obviously needed corrective time, and we talked about for the entire duration of this correction that Bitcoin was going through correction, gearing up for another leg of the bull market, and that's exactly what we saw. And then out here on the 3-daily chart, we saw three white soldiers showing up on the candlesticks. We saw a bullish engulfing candlestick formation followed by the three white soldiers. Of course, we've traded sideways for nearly about 18 days now. But Bitcoin has shown that it can break out on high volume, as we saw right here on Wednesday, June the 21st. And Bitcoin can go through a major rally, and Bitcoin can move back up to current resistance. That's where we find ourselves right now. Hitting our head on $30,000, hitting our head on $31,500, right in that zone. Trying to break through into our next zone of resistance. And that, if we're able to do, is going to end up being the trigger that allows Bitcoin to rally all the way up into the 30s and potentially even on to 40. Right now, the major level of resistance I'm looking at is 32,935. I'll just go ahead and write it in here. The main level of resistance that I'm looking at, and set it red for resistance. Let's go ahead and turn that red. The main level of resistance I'm looking at is right here at 32,935, because that is the level that Bitcoin initially dropped down to in February of 2022. And when we fell below that level, that's when we really knew we were in a bull market. There were ways that we could have called and confirmed that we were in bear market up here. But down here, this is where we really knew that we were in bear market. This, of course, was right around the collapse of Luna. And of course, a little while later, we would see the collapse of FTX as well, about 8 months later. We're about 8 months removed from the collapse of FTX, and Bitcoin has obviously been doing very well following this bear market's completion, and Bitcoin has begun the run back to the upside. Whether or not the altcoins will follow in its footsteps on the majority of that rallying is yet to be seen, but Bitcoin is in great shape right now, and I do believe that the next leg of this bull market will be coming sooner than you might think. Now, let's talk about a couple of things fundamentally. fundamentally speaking, things have changed very drastically for this bull market than they had for the last bull market. During the last bull market, we were coming out of a pandemic that had a greater impact on our world than anything since any of the major outbreaks of the 60s and 70s, probably honestly back to the swine flu. The Spanish flu turned into swine flu. The Spanish flu in 1917, 1918. That flu was much, much, much more deadly than what we saw in 2020, but 2020 also was a very, very devastating year in its own right. Not just the humanitarian toll, but also the economic and political and social toll that was taken from that. And so Bitcoin was this almost phoenix asset that rose from the ashes of the pandemic. And alongside a huge amount of quantitative easing, basically zero interest rates, massive interest in investing in tech stocks, because coming out of this pandemic, everybody thought we're moving into this brave new Star Trek-y world, and we're going to have these cool blue light air sterilizers in all our offices, and it's going to be great. And then Bitcoin would go on a massive rally through that pandemic. Unfortunately, the reality started setting in over the last 2 years, especially with the conflict in Ukraine, that this is not, the next generation, if you will. There are major changes going on geopolitically, major changes going on demographically. One of them that you don't hear about very often is that the West is aging at an exceptionally fast rate. The average age of Western countries is going up dramatically, and so we're having far less young people. We're having smaller and smaller young generations, which means that there's less young people to drive the economy, and also typically many of the scientific breakthroughs that lead to this feeling of, oh man, we're always innovating, have kind of started to slow down. That tends to happen when you have less disposable income as an economy, and the less disposable capital as an economy, less people that are able to go and do things innovative that have an economic backing to be able to go and try out a new kind of startup. When was the last time we had a major breakthrough technologically as a human species? Think about it. We're seeing quite a lot of that in the cryptocurrency space, but we've had smartphones for 15 years now. We've had laptops for 25 years now. Internet's been around for 30. Cars have been around for 110. Longer, they've been commercialized even than that. So we're seeing this almost this season of stagnation technologically. And so when you see that kind of thing occur, then you start to see less and less people interested in investing in risk on technological assets. They have much more interest in investing in things that are blue chips, like oil companies or like car companies or the tech companies that are at this point blue chip and established, and they're probably going to be here forever, even if they mess up and rename themselves to Meta. They're still worth hundreds and hundreds and hundreds of billions of dollars. And so we're in a very different landscape right now than we were at the beginning of 2020, when Bitcoin was starting to look like the hot commodity that was going to save people from the inflation of the United States dollar. Many people still love Bitcoin. Many people are still in Bitcoin, but the allure of we're entering this new era, and so therefore we need a new currency, that was a flash in the pan, once in history moment. And while those may come again in the future, they're unpredictable. And hopefully something like the pandemic doesn't happen ever again in the first place. So when we're looking at Bitcoin through the lens of this bull market, we have to understand that this is a fundamentally different zeitgeist. This is a fundamentally different canvas upon which the bulls are painting their market. And so that is likely going to lead to this bull market being a little bit smaller and a little bit slower. And I want us to keep that in mind, because when we're analyzing how the market is moving, we want to make sure that we're using realistic expectations, and we want to make sure that we are having a proper understanding of the fundamental forces in Bitcoin. Think about it like this. If you're trying to understand physics, if you're trying to understand the way the universe works, then you have to understand the strong and the weak nuclear forces. You have to understand the gravitational forces, the gravitational force, and you have to understand the electromagnetic forces. Those are the four fundamental forces in nature. To understand exactly down to a 100 billionth of a decimal how strong those forces are and how they impact everything is going to ensure that all of your other physical calculations, from how neutrinos move through lead to how neutron stars form in distant galaxies, understanding how the physical realm works is based on understanding how the fundamental forces of the universe work, so that you don't have all of your calculations thrown off. Think about it like this. If you're trying to figure out how much this phone weighs, but you don't know the gravitational constant of the United States, of the Earth at 9.81 meters a second squared, if you don't know that number, then you're never going to be able to figure out the weight of this phone. You might figure out the mass, but you're never going to figure out the weight, because you don't know what gravity is. on that. If you don't know what planet it is that you're measuring something on, you're never going to know how to fine tune your scale, right? So in the same way in cryptocurrency and in technical analysis, if you don't understand the fundamental forces weighing on the Bitcoin market, as in the background geopolitics, the background economical models, the background interest from institutions, the background interest from retail, if you don't understand these fundamental forces in Bitcoin and cryptocurrency, then you're going to have a very difficult time understanding how everything else plays out. If you don't understand what gravity is and you try and calculate the weight of your phone, then you're going to end up having your calculations thrown completely off. You have to understand the fundamental forces so that you can understand how to calculate anything that is derived from them. The size of the bull market, the direction of the bull market, how long it takes for certain movements to happen, all goes back to those fundamental guiding forces in crypto. A few of those, of course, are the interest from institutions, the interest from retail, geopolitics, demographics, regulatory realities. Many of these things are nowhere near as bullish as they were during the last bull market. And that is not me trying to bring you down. That is not me trying to rain on your parade. What that is me doing is going a little bit against the current, letting you know this bull market might look a little bit different, might take a little bit longer, might be a little bit slower, but there's a maturity in that too, because Bitcoin rallying 2,000% and then dropping 80%, or 65 or 70% as it does most bull markets is not something that is going to actually attract many institutions, many retail. It's actually going to drive them away and scare them. What we do want to see from Bitcoin instead is a more gradual growth over time that, yes, is still aggressive, is, yes, still beating the stock market by leaps and bounds, but is one that is a little bit more consistent so that we can have a little bit more confidence investing in that medium term. You're investing for the next 15 years, don't worry about it. Bitcoin's going to be fine. If you're investing for the next year, though, people really have a hard time doing that because they bet that there's probably a greater chance that a year from now, Bitcoin's going to be lower at any given time. I don't mean right now. Right now, a year from now, Bitcoin will likely be higher. But at any given time over the last 13 years, if you invest in Bitcoin, you can bet more than likely a year from now, it's going to be lower than where you bought it in. And many people are trying to invest in that medium-term category. An investment is everything over a year. But if you're investing for a year to 3 years and you're trying to park your money somewhere for a few years just to grow it, people have a difficult time doing that in Bitcoin. And they also have a difficult time investing in it for the long term because it's a very young asset still. And so as Bitcoin starts to clear some of those hurdles, number one, it gets older. And number two, it starts to have a little bit more smooth of a growth curve, then Bitcoin is going to continue to mature. And I do believe that's what's in the future for Bitcoin. I do believe a more mature, more gradual growth curve is going to happen, and that will bring on a flood of institutional and retail investors that can say, all right, it drops 30 or 40% every couple of years, but in general, it still does far better with the volatility side of things than it did anyway. It's much nicer to have this general gradual uptrend than to have this movement that Bitcoin has always had. And that's not to knock Bitcoin. If you're holding Bitcoin for the long term and you hold it for 5 or 10 years, I think you're going to be in great shape. But as I said, we want to get those people that are looking to park money somewhere for a year to 3 years as well, and they do have a difficult time getting in right now with that in mind. Thank you guys all for tuning in. Like I said, we've got Colin McDonald in chat, Micah Hall, Sean O'Brien. Thank you guys so much. Crypto Trucker Mike said, yo, good morning, Jeb. What's up? Gates even said the next pandemic and there will be another one by 2025. Yeah, we'll see. Halving is still a major player. No, yes, the halving is still absolutely a major player. Really appreciate you bringing that up. The halving is likely going to be a very big driver of bullishness. I do believe that we're going to see the halving lead to major bullishness on Bitcoin. In fact, I think that the halving is going to help Bitcoin to go back to all-time high within the next 18 to 24 months. That being said, this is probably one of the last halvings that's really going to have much of an impact on Bitcoin at all. And the reason for that is the block reward's already so small. We're going to be going from 6.125 Bitcoin per block down to 6.25 down to 3.125 Bitcoin per block. And so that drop is just not very significant, especially the one following this. It's just not going to be a very big deal at all. Really appreciate that. All right. Cloud Casino said, even if you DCA'd from the top and bought every top daily, you'd still be up right now from DCAing. Interesting. I'd have to go back and fact check that myself. But if you started from if you're saying if you started from day 1, hour 0, is that what you mean? That might be the case. I'm not quite sure if you'd be up. You'd probably be around. Yeah, I'm sure. I'm sure you would be up. I'm sure you would be up. I believe if you're talking about. If you were talking about from the very beginning, as in from the day one, and you were buying Bitcoin back at like a penny, then yeah, I'm sure you would still be up quite a bit, even if you're down 50% on those more recent investments. Crypto Ben Franklin said, good morning, Jeb. Hope all is well. Doing well. Really appreciate that. Will this trigger an altcoin rally? Great question. Let's look at the Bitcoin market dominance. Right now, Bitcoin is sitting at 49.9% market dominance. And that shows that Bitcoin has been going through this major rally here. We saw Bitcoin rally all the way from 37.86% all the way up to where it currently sits right now at 49.57. We've had a little bit of a retracement, but Bitcoin's rally on market dominance does indicate that it is in good health. It indicates that Bitcoin is starting to run away with market dominance at the expense of that others category. Remember, the others category peaked out right here at 19.27%. So far, it's dropped down to 13.72. So Bitcoin has pretty much gobbled up all the market dominance from everything out of the top 10, which I think is a very healthy thing. You see, whenever you have a forest, I've used this analogy before, but I'm going to use one subset of that analogy. Whenever you have a forest and you have a ton of undergrowth growing up around it, you have bushes and shrubs, and you have detritus and fallen trees and all this junk at the bottom of the forest floor, that's typically not very healthy for a wood. That's typically not very healthy for a grove, whatever you want to call it. And so there is a time where you need to clear that out, and the decomposers help with that in the forest, but also fires help with that. So far, we've kind of had not so much a fire that's helped to clear out a lot of the dead debris, the detritus, that value that's in that others category that doesn't belong there. We've had just some decomposition in that category because we've seen the market dominance drop from 19 down to 14%, and that has meant that quite a lot of that valuation has flown out of the others category straight into Bitcoin. Think about it like this: if you want to have a healthy forest, you don't want all your nutrients, all your phosphates, all your salt, all your sodium, all your like I said, phosphorus, all these different fertilizers sitting in trees that are dead on the bottom of the forest floor because they're not doing anything for the forest, just sitting there. You want the decomposers, the little, the roly-polies and the microbes to come through and eat the tree and poop it out, and then they have the nutrients return to the soil and the other trees can grow it. A healthy forest is where the majority of the nutrients are in the biggest and the strongest trees, because those big, strong trees are they are the rock of the forest. And so that's kind of what's going on with Bitcoin right now. The decomposers, and the SEC is acting as a very, very, very powerful forest fire that's doing just this, are coming through and weeding out value in the smaller cap altcoins, and that value, those nutrients, that interest, whatever you want to call it, is being returned to the big sequoias, the big redwoods, the big pines, the big oak trees that are the hallmarks and the bedrocks of the forest itself. And in Bitcoin, that is Bitcoin. And in cryptocurrency, that is Bitcoin. And so Bitcoin's gaining quite a bit of those nutrients back, if you will. It's gaining quite a lot of that strength back. And ultimately, in the short term, this could be a bad thing for the little guy because they could get shaded out. The big trees come in But in the long run, when you have a healthy forest, then everybody thrives. It's a little bit like in your personal finance. When you have your personal finances set up, and just a really quick rundown of how you ought to do this and how we do this. Take your monthly income, subtract your needs, so that's your grocery bill, your doctor bill, your car insurance bill, your housing bill, your preschool bill, whatever. Subtract all your needs from your income. You've got a discretionary budget. Split that discretionary budget up into 3 columns: wants, investments, and generosity. And then let that money trickle down in whatever system you set up. Maybe it's 5% generosity, 50% investment, and 45% wants. Maybe it's 70% investment, 35% want, and 15% generosity, enjoyment, and 15% generosity. Whatever it is, whatever the split is, that adds up to 120. Either way, you get my point. When you have that discretionary income in your personal finance coming in, or in your business finance coming in, you should have the majority of it going into that investment category, ideally. You might not be there today. You might not have the income to do that. Maybe your bills are too high, whatever. But ideally, you'd like to have the most amount of your money and the most amount of your time going into your investment category so that the overflow goes into your enjoyment and into your generosity. Think about it like this. Make some money, make some investments, and let those investments pay for your toys. Similarly, with your time, invest a lot of your time, and then the overflow of that, as you've grown in how much financial sovereignty you have, then you have more time to go and do things. Don't stop doing things. Make sure that you're spending time with your family and spending time with the Lord. Make sure you're being generous with your time, no matter where you are in life. But as you grow more into a more financially stable individual, you will end up having more time to take more time off and do more enjoyable things and go on bigger trips and buy fancier toys and all that. But pay for your time and pay for your toys, at least the growing of those things, with the overflows of your investment. Don't neglect them at any point, because then if you just become a workaholic, that's never going to be there. That's never going to be right. You need to start with good form. Don't start bench pressing and just doing this. Start with good form. Get your form right. But then you have a little bit more flexibility to try some new things out after you've grown. In the same way, in Bitcoin, you grow Bitcoin as the investment. You grow Bitcoin as those redwoods, those sequoias, those big trees, and then the overflow, the fruits of those large trees, the fruits of those investments that you've made, the fruits of you prioritizing the area that will most impact and most grow those other areas. That's where the success will come from. And that's what you're seeing happen in Bitcoin right now, is you're seeing a shedding of things that are important. The altcoins are important, but should not be the leader. And that's kind of the point I'm trying to make. I'm not saying that in your time, enjoyment and generosity aren't important. They absolutely are, but they can't lead. You've got to lead with having investments in your time and in your money so that you have those things to give. And so you have those things to enjoy. But if you end up sitting in bed all day, playing Minecraft all day, as I used to do. When I was a kid, I would sit there for 14 hours straight and play modded Minecraft, and I wouldn't eat. My health went down the tubes. My time I never got back. Sure, I had some fun, but at what cost, right? Better to invest my time, better to put value into Bitcoin, better to grow those trees so the overflow, the fruits of those things, will be so much more enjoyable because you know you earned them. And so that's where Bitcoin is right now. Bitcoin is growing. It's gobbling up all of that nutrient. It's gobbling up all of that attention. And so it's going to grow. And the fruit of Bitcoin growing will be the altcoins growing. And the altcoins will actually do better in the long run because the altcoins are in a position where they need to be the leader, the follower, not the leader. With Bitcoin being the leader, when Bitcoin thrives, everybody else does too. And so that's where I think Bitcoin is right now. I think the market dominance is a very important part of what we're looking at right now. Good morning, Jeb and chat. Happy Monday. Happy Monday to you, Shadrach Frost. My broke self makes $20K a year. I don't know how I'm not homeless in Biden's economy. I went to buy a house, and yeah, forget that. It would take me 350 years to pay it off. Yeah, you, my friend, have to find a way to make more money than 20K. It is very difficult to make it anywhere on $20,000 a year unless you have... there are ways to do it. I do know somebody that bought a home at auction, and I do know somebody that bought a home at auction for like $15,000. They are in construction, so they fixed it up. The property's worth about 10 times that now. So it is doable, and they own it outright because they bought it at a tax auction. But you've got to really be quite diligent to make it on 20K a year. You've got to find a way to get that income up. That's going to be difficult for you to really reach financial sovereignty with that. There's two different issues when somebody's not financially sovereign. There's a spending issue and there's an income issue. And for us, we've gotten really, really, really tight on our spending in the company and in our personal finances. We've gotten really good at budgeting and being frugal and spending money properly. We've even come up with ways to calculate what's worth our time for saving. We figure out if we're saving this much an hour, then it's worth it to do that. But if we're saving $1 an hour, then it's probably not worth it to do that. We did something the other day where we saved about $1 an hour, and we were like, wait a minute. We want to save money, but that's getting into the area of being a penny pincher. We don't want to be a penny pincher, but we also don't want to be somebody who is not frugal at all and is spending $100 to save 10 minutes. That's not a good idea either. Where's that balance? That's something that we want to teach you guys as well. And so you got to get the spending area under control. But the issue with the spending area is it can't be the leader. The spending area is not the leader. It's the follower. It is the manager. The income is the area where you're really going to be able to grow your wealth. You want to have a very diligent budgeting and financial plan, investment plan. And you need to be very good about saving money the right way, because there's right and wrong ways to save money. But you also want to make sure that you have that income coming in. Because ultimately, if you have, let's use this example. You've got the Colorado River. The Colorado River was first dammed with the Hoover Dam in, what was it, the late 20s, I want to say, or early 30s. I think it was worked on. Actually, it was worked on during the New Deal. So it was in the 30s. I have a poster of it. I went to the Hoover Dam. I've been there. The Hoover Dam has so much water coming through the Colorado River. And so the Colorado River Compact was made in the 30s, around the time that the Hoover Dam was created. And so the Colorado River waters and irrigates multiple states: New Mexico, Arizona, Nevada, and California, and it used to water a little bit of Mexico, but the Colorado River doesn't even make it there anymore because we use every single drop of it. It doesn't even make it to the ocean anymore. There are two things that you can do to solve that problem. Either number one, you can be even more frugal about how you use that water that's coming downstream. There's one source and 1,000, 100,000, 1 million people, 10 million people asking for water, but there's one source. It's the Colorado River. To fix the issue of a water shortage in the Southwest, you can do two things. Number one, you can be more frugal about using the water that's there, but eventually you can only be as frugal and pinch pennies and issue water credits and make lawns out of cobblestone all as much as you want. You can only do that for so long before you got to face the reality that there's just not enough water coming down the river. So in that aspect, you can do one of two things. You can start making very difficult cuts. You can say, okay, we're just not going to do agriculture in the Southwest anymore. Okay, this million homes are just not going to have running water anymore, and so you're going to have the biggest real estate catastrophe since 2008. Or, and I don't think there's really a great way to do this, there have been propositions, but it's never really been shown to be profitable, you can figure out a way to increase the flow of the Colorado River. There are ideas of people diverting 1% of the Mississippi through this great massive canal project and run it over the Rockies and all this. Whether or not that'll ever happen is yet to be determined. It probably won't. But to solve the Colorado River issue, they are in the classic issue of trying to manage scarce resources. And the issue is really not that they're not managing the resources well, because they're frankly managing it about as well as you can. The issue is there's just not enough on tap. It's the same thing with your income. You can manage the flow of your money as well as you want. Be very disciplined about budgeting. Save $5 here. Save $1.50 there. Don't be a penny pincher, but don't be Scrooge McDuck either with your money. But at the end of the day, you will get to a point where to reach the goals that you have, you will probably find that your income just isn't high enough. Maybe it is, maybe it isn't. But a lot of times you will find that your income just simply is not high enough to reach the goals that you want to reach. Maybe you want to pay your house off in 10 years. It's just not enough income. You can cut bills as much as you want, but unless you want to eat, I don't know, what's cheap? If you literally just want to eat rice, Dave Ramsey, you're not even getting beans. You're just getting rice. Unless you just want to eat rice for the next 10 years, you're not going to do it. You got to increase your income. And so I have no idea how to pronounce your name. CeeLo? That's where you've got to find. I managed to get $20K in savings, though. That's what I'm saying. It sounds like you're really good at managing money. Sounds like you're really good at figuring out how to make that $20K stretch. But you've got to find a way to make more than that. And it sounds like that's what you're doing. So good for you. Not trying to talk down to you. You're doing the right thing. But I think it's important for all of us to hear. I definitely need to hear that, sometimes the issue is not that you're not managing the money well enough. Sometimes the issue is that you're not creating enough of it in the first place. All right. Let's see. Crypto Mini Bike said, hey, everyone, I need prayers. My daughter's stepbrother drowned last Saturday and is on life support in Seattle. His name is Evan. He is 18, just graduated from high school a couple of weeks ago. Oh, my goodness. I'm so sorry. Well, Lord God, we just pray that you would protect him and work a miracle in his life. And you'd be with his family and you'd show yourself through him. Amen. In Jesus' name. You said Clint. Yeah, and thanks for responding. Absolutely. Absolutely. I hope that was helpful. Again, it's never my intention to talk down to anybody, but I do like using examples in chat. I do hope that was helpful. I'm in BTC, ETH, ADA, Sol, and Gala. If NATO gets in direct war with Russia or China, should I sell any of those? How does crypto react to war? Are there any other asset classes that are durable during war? Yeah, war bonds and Boeing, Lockheed Martin, and the other defense contractor companies. I couldn't come up with a word for right now. Absolutely. Yeah. So great question. Here's the deal with that. I'm going to answer this. And I'm going to have to wrap it out. Thank you guys so much for tuning in. It's raining again. Welcome to Rainsville, everybody. It's been raining for like 2-3 straight weeks. It almost flooded. It flooded some houses around here recently. If NATO gets involved in a direct shooting war with Russia, that is going to probably send the stock market through the biggest crash that we've seen in a very long time. And the reason for that is because the entire economy will have to be re-geared around growth and enjoyment into investment in national security. Mainly for Europe, although the United States would likely jump in and basically treat it as a threat on itself too, because Europe is basically a proxy of the United States. If there's a land war in Europe, then the United States is almost going to treat that as if there's a land war in California, which there basically already is if you've ever been to LA. That would lead to a huge crash in the stock market. War with China would do that as well, because that'd be a direct conflict with, you'd probably see a couple of carriers sunk within just a couple of months. How does crypto react to war? We don't have precedent for that. That's the first thing we have to say. That's the first thing we have to say, because that's a responsible thing to say. We don't know. All we do know is that when the Russian-Ukrainian war started, Bitcoin was trading right here. And then Bitcoin did this following the Russo-Ukrainian war. So that's the only precedent we have for major global, not global, but globally significant conflict, is that Bitcoin did that. Bitcoin dropped grand total 66% within a year of the Russian-Ukrainian war starting. Now, we have to keep in mind that, of course, that was probably going to happen for the most part anyway, because Luna was probably going to collapse anyway, FTX was probably going to collapse anyway. We're in a bear market anyway. But Bitcoin would likely fare very, very poorly. I think that Bitcoin would do the best, would fare the best during that conflict, and I believe Bitcoin would actually probably come out higher than ever in a war in the long run, but in the short run, it would definitely damage it. Things like Gala, not sure it would work very well, because so many people would be focused so much on the war rather than on actual entertainment. And you'd probably see a lot of investment in entertainment go down. You'd probably see drops in Netflix even more, in Disney Plus, in PlayStations and Xboxes and Minecraft and all the different entertainment things, because so many people would be going into that war. That would be, if the United States was boots on the ground over there, that would be in that regard. And of course, if nukes got involved, then forget about it. We're trading in bottle caps, not Bitcoin, because the internet's not going to exist anymore. But I think that Bitcoin would probably honestly still be one of the most durable assets during a conflict with Russia, though. And the reason for that is because Bitcoin was designed to be resistant against outside forces. So how will all these assets react? I think Bitcoin, to be honest with you, and defense stocks would probably be your best investment. Yeah. But at the end of the day, there would be a huge crash in everything. Everything would drop dramatically. All right, guys. Hope you did enjoy today's stream. I'm going to have to wrap it out. Thank you guys so very much for tuning in. And really appreciate all of you for tuning in. Definitely will be praying. Definitely will be praying for Crypto Mini Bike, your daughter's stepbrother. Praying that Evan, that's his name, Evan. We'll definitely be praying for Evan. Let's have some prayers for him. Thank you, Lord, for his life. We pray that you'd protect him. Good deal. All right, guys. Like I said, that is going to wrap it out. Before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.